Good afternoon, this is Brad Dennis with BIS Commodities with your market wrap-up for the week ending December 2nd. We've seen lower prices in corn and beans this week. I believe beans down about 13.5, corn down about 13 as well. In beans, it's more of an issue where we had a shortened week last week with the holidays. We saw a lot of money flow into our markets, and futures outpaced what we were asking in the cash price. You look at the basis for beans right now, and we're at historically wide levels. And to have the futures run up as far as they did was a little bit overdone. Now next week we do have river close on beans, so maybe if we can get that basis to narrow up a little bit, we can put a little bit more on the bean market. But you have to look at that 1065 as a resistance area now, 1020 as support. 1020 2 weeks ago was our resistance, and what was once resistance is now support. So 1020 to 1065 until you have it closed down either below that 1020 area or above the 1065. Weather-wise, down in South America, basically Brazil is planted with beans. They've got a good crop growing. They've got the moisture as well. The concern might be Argentina, but they have a lot of planning to go, so they have to catch up with that, and then maybe you'll see a little bit of, after they catch up with their planning, then the need for moisture might be a little bit more concerning. But that's still 2 weeks, 3 weeks out. When you look at what's happening with cash in South America versus the U.S., you do see those bids out of South America down for the last half of January and into February, undercutting the U.S. So we will probably be losing a little bit of business to them. Also, we're expecting some Brazilian beans to be coming out at the end of January as well, because they did get planted in a timely fashion. And with those being planted in a timely fashion, they're going to have a fairly decent safrinha crop as well. So bean side, yeah, we might have a little bit of a basis move here because of river close, but you're still going to see a good crop coming out of South America. We still have a lot of excess beans up here. And the other thing that you got to kind of wonder too is how front loaded is the bean demand right now with the new administration coming in. Are we seeing everybody buying up before that new administration comes in to avoid any possible tariffs or taxes that might be involved there? So keep that in mind. As far as corn's concerned, like I said, down 13 cents. Your March corn is basically 338 to 360 or 340 to 360, give or take a couple cents. The main reason corn was down was we were making contract lows in the wheat market, and that wheat just drug corn off to these bottom levels. Now, one of the reasons wheat was down, you're looking at some extra bushels coming out of Australia. Government has them at 28.5. I believe out of Australia they had them at 31 to 32. So significantly higher. It's said to be better quality and better yields. So we'll see if that continues as the harvest continues itself. Another factor we're seeing on the wheat market is that Egypt is basically done tendering for wheat probably over the next few months, so that demand is gone by the wayside. So with the lower demand and wheat harvest going on in Australia, that's pressuring it. Funds are very short wheat, so everybody's wondering if there's going to be some kind of short covering rally at some point. And really, you've got to look at March wheat, and you've got to get up over your 100-day moving average, which is about 425, 430 area. So if we get up there, yeah, there could be some continuation, but that's still a ways to go on the wheat market before we see that happen. Next Friday, we're going to get supply and demand report out of the U.S. government, so next week we'll be preparing for that as well. In other markets, looking at the crude oil market, That was all based on OPEC actually sitting in the same room and agreeing on something. Now they did agree on 1.2 or 1.4 million barrels per day cut. Where those cut levels are from, though, is still up in the air. Who's going to cut what? Well, when OPEC gets together, yeah, they might want to agree so they can talk up the market, but if they actually follow through with what they say is another thing. Today we did hear talks about further Iranian sanctions, and that gave a little bit of a boost to the end of the week on crude. But we're also seeing rigs here come back online. Crude's over $50, which is hedgeable for U.S. oil companies. So we'll probably see them take advantage of this, and the glut is still very much alive out there, I think. Data this morning was non-farm payrolls. Out of the government, we had 178 non-farm payroll increase. We had a 5.6% unemployment rate. So unemployment rate went down. Participation rate didn't really help things out at all. But what you're looking at is you're looking at a number that's good enough to allow the Fed to raise rates on December 14th. And that's what's being factored into the market right now. So with that happening, higher rates, pretty much 100% guaranteed for the 14th, we're kind of struggling around this 2,200 area in the S&P. Now, over the weekend, another bit of macro item or macro item will come out, and that'll be the referendum in Italy about whether or not to stay in the EU. People are spooked about this because you had the Brexit, and all the polls said that they wouldn't withdraw, and they did. You had the election, and nobody thought that Trump could win, and he did. So the polls are saying that Italy's going to stay in the EU, and nobody believes them. So it'll be very interesting to see what happens there. If they do elect to get out of the EU, that's only another bullish play for the dollar. So all of a sudden you've got higher interest rates, and you've got the EU or the European currency starting to crumble. That's going to put a bid under our dollar, and that's going to make things very expensive coming out of the U.S. And that's going to hurt our U.S. growth because our exports will go down, and that's going to hurt corn and beans as well. They'll become more expensive. So something to watch over the weekend. Lastly, in the livestock markets, Wednesday we saw Kansas and Texas were trading 115 on cattle, and everybody was pretty excited about it, and then we sold off the next 2 days. So that higher cash has come and gone. Today was kind of a mix of the day before first notice day and option expiration, so you did have a lot of longs exiting the market. What we'll have to see is whether or not there's steady cash for next week. On the Fed cattle exchange, which some are starting to watch a little closer, it's a very small sample size of what actually goes on, but it did get up to 114 and a quarter. So you're continuing to see that exchange see higher highs or higher prices on a weekly basis. So like I said, if we see steady cash, I would imagine we get a little bit of a bounce in this cattle market. So we'll have to wait and see for that. But as far as next week is concerned, over the weekend, the referendum out of Italy for the equities and the dollar, corn and beans, don't really see a whole lot. They'll still be in tune to whatever kind of weather issues might come out of South America. Look for Friday's S&D report to tell us that we've got a lot of both corn and beans still laying around. And then the cattle market, look to see what cash movement happens early in the week, plus keep an eye on the storms that are moving through. There could be some big ones that might cause a bid as well. So that is your week in review for the week ending December 2nd. If you have any questions about these things, give us a call here at BIS Commodities, 1-800-373-2525, or look us up on the web at www.biscommodities.com.